So Jeff, Lutz, and I were just, taking a look at our pasts, and it turned out that we were both St. Louis people. We both
Mm-hmm.
born and raised in St. Louis. So there you go, just down the street from one another. Well, I was a bunch of years ahead of them, but there you go. I guess I was probably gone from St. Louis before you were born, something like that.
It's possible. We never know.
I moved out in 65, so that gives you an idea.
Yeah, probably. Yeah.
Well, as long as we're talking about numbers, Jeff, I have a few numbers to throw at you because, that's what we do on this channel. So AJ has posted 95 cents for quarter four. Larry was on my show on Monday night. He said he thought 95 cents sounded good to him. That he thought that was he hadn't done a lot of his detail work yet, but he thought that seemed pretty right on. And then I posted for next year, and I did go into a lot of detail that I thought we could get to a little bit more than $4 for next year. And that wouldn't be a big stretch if you have 95 in the fourth quarter. So what do you think about these numbers? Are they in the range of what you're thinking, or do you think we're crazy?
Yeah, no, I respect the work that AJ does and the analysis as well that Larry does. I don't I don't tend to argue these things up or down a penny here or there, and I respect the work that is done to get to a number. It's just something that I don't do. I kind of look at more of the medium and longer term trends that I see and I can extract. And I was very adamant early in the early part of this year is that Tesla's wired differently as a company. They're structured differently as a company to attack and drive COGS. And they will get differentiated results from other companies that make EVs because of it. There's a couple of reasons, but to get back to your number, I don't think 95. I don't think it's out of the ballpark. It's a little bit aggressive coming off of what they just did
Mhm.
in this quarter. So it's kind of a sizable quarter to quarter leap in percentage terms. You're talking, 20% or so, or more, kind of a leap. Um, so yeah, even higher than that. So that part of it would be like, okay, that's somewhat of a leap, but they're going to have to get production, well over 520 probably somewhere in that area, to have an opportunity to be greater than the volumes that they promised from the prior year. So there's some definitely things coming together. So they're going to get greater operating leverage. You're going to get greater fixed cost utilization in the factory, greater operating leverage overall, and those metrics should be assisted. We know something. We definitely know some things about COGS and where they got some assists from. But when you're not inside of the company, you won't know everything. Um, so there's a couple of areas. First off, Tesla's structured differently. Like they have integrated teams that work on these modules, like or it's the electric motor and so forth. They don't have a design department that designs the module and then hands it off to the Gigafactory team where they do their own, motor production. Say, well, what do you think about this? Well, if I were to DFM it, it'd be like this and hand it back. It's not this serial thing. It's very iterative. They come together as one group
Right.
and they engage early and they work together as a group until they hit a collective target.
Mhm.
I believe in the case of next year's vehicles or the new motor is to have a sub $1,000 motor, and to do that, you need an integrated team. So that's one way I think they're structured. They're just wired and structured fundamentally differently. They are very aggressive and about cost targets and budgeting and setting it early. But the other thing is, in just other companies, they put a vehicle into production, and it's not to say that they don't work on cost reductions, but and it's a long explanation, but the way that Tesla's supply chain is designed, they don't have a bunch of parts sitting before the factory, and they don't have a bunch of cars sitting after the factory. And the fact that it's literally fractions of what other companies do, they can be more nimble and cutting over into a new change. That's why you hear this every 2 weeks where we're cutting changes off, because they literally have very little inventory in front of them. In fact, in this quarter, in the balance sheet, they production's up, I think 15 or so percent from Q2 to Q3, but balance sheet inventory, their four wall inventory was static.
Wow.
So that tells you that they actually turned material faster from the time they brought it in to the time that it left the door They're turning the material faster. So that there was actually an efficiency crank that turned faster. And why does all this matter? So why does all this matter to COGS? It matters to COGS because they don't have a bunch of stuff before the factory. They don't have a bunch of that stuff doesn't get invalidated and
Right.
doesn't turn into scrap because that would hit the bottom line and hit unit economics. These other companies are mired in 6 to 8 weeks of dealer inventory. Then they've got their own inventory between themselves and their factory and the dealer. And then they have their supplier inventory upstream. And they're also running a lot more models than Tesla. So their ability to forecast and tell suppliers, I want 1,000 of these, I want 10,000 of these, is off, by a factor of, many times over. It's more difficult to forecast more models because you just don't know what consumers are going to buy. So with all that in mind, Tesla has a structural COGS advantage that, quite frankly, until there's another company that gets to escape velocity volumes, like let's say Rivian got to 150, 200,000, 300,000 units, then they could potentially approach, the kind of performance that Tesla does with percent on quarter COGS reductions. But they're not there. They're not close. And they've never reached that escape velocity. They never got the unit economics right from day one. And quite frankly, they had more initial model complexity than Tesla did as a startup. So long answer, but I think Tesla is structured in a different way to have this COGS reduction continuum occur. And finally, I just want to clarify something for people, because when you listen to the earnings call and you've listened to it for the last 4 or so quarters in a row, the CFO says one thing, which is basically, this is going to be difficult to do. There may not be a lot of money out there. And that's what CFOs do. That's the CFOs I worked with as well. Like, they have to hedge. They have to say, like, here are the risks. They have to outline those risks to investors. But the engineers, the VPs of engineering, the VPs of supply chain stepped up to the mic and said, we've got a long list of opportunities we're going after. And one of the VPs of supply chain stepped up to the mic, this was a couple of quarters ago, and said, yeah, we're going after this event-driven list, but we also have a new product portfolio that's highly coveted, and like we can leverage our new products to drive pricing down on what we buy today. So I don't want to drone on too long, but I do want to come back to this point because there's a lot of confusion in the analyst community. They didn't get it. Like, they were just stunned by
Right.
the gross margin performance. And it's not like we were pounding the table and saying they were going to beat, but if some of my messages early in the year, like, they're structured differently, they're going to surprise on the COGS side. It's just a question of when, and we just saw it.
Right. Well, I think that AJ's numbers took into consideration, of course, a much bigger number on energy next quarter, as well, compared to the third quarter, more like the second quarter, and maybe even more than that. And also, as you said, getting the 515, 520, units out the door, that results in Elon making his number. And I've been saying for a week now that Elon will probably stand in the middle of the 405 freeway and sell the cars one at a time if he has to get that number out the door.
Yeah. I definitely see they're motivated, and that could turn into, by the way, this is why COGS it's even difficult for the company
Sure.
to predict. Where Tesla has confidence in is they have a great engineering and supply chain program and Gigafactory team they generate a long list of ideas and they go after them. And then they have this very nimble inventory structure that allows them to flex stuff in very quickly. But COGS are a very difficult thing to predict. So when I see these, I respect people that try to like model it and put a spreadsheet out. But man, it's even when we were in the middle of a quarter, we're like, man, it's a difficult thing to call. But you can definitely outline the structural advantages of one company over another. When I looked at the BYD earnings and I looked at the net income, I'm like, wow, well, this is what happens when you have, north of 20 to 30 models to produce less EV volume and less net income. And I think what people are starting to see is, and there's real reasons for this in terms of their average, MSRP and so forth, but there's a structural, for a Chinese company, even there's a structural cost disadvantage of having all this complexity.
Right. Right.
in your supply chain.
Yeah, and even again, my business, my manufacturing business was so much simpler. I mean, in terms of the number of types of products we sold and the complexity of the products themselves, and yet quarter to quarter, we were off on COGS.
Yeah.
It's so hard to predict because one
Yeah.
time I was off because the scrap was way higher than we expected because third shift was not doing what they were supposed to with the scrap. I mean, something like that can hit you really hard.
Yeah. Yes.
Okay, so if we do hit 95 cents, what do you think happens to the earnings per share? I mean, what happens to, I'm sorry, to the share price if we hit 95 cents?
I mean, I think analysts have to go relook at 2025, just like they had to do with this earnings, because I think they had 13% growth for next year, and Tesla said they're going to be between 20 and 30% on the top line. In terms of units, I should say they were talking about the auto business in terms of units. So they all had to go relook at it and go type in their new numbers in the spreadsheet. So if they print 95 on the earnings side, then yeah, they're probably gonna have to go back in and I don't know the exact, I don't have 2024 in front of me. That's something Gary does do a really good job of just looking at what the street is like. What are they considering?
Right.
How are they thinking? I just don't have that number in front of me, but I would have to guess that it would be more supportive. The the thing with the Tesla stock price, and I don't predict the daily stock price, and I don't give financial advice, but man, Tesla is further and further escaping from being an auto company.
Right.
Every single quarter, you see more and more of the revenue coming from these other sources, but you have these analysts that have this like magnetic power and they're trying to like pull it back into like, well, if it's an auto company, it should be looked at like this. And that's why we look at X ZEV credits and we look at X deferred revenue. I'm like, well, you're doing all this X stuff on things that are going to happen in perpetuity. And it's very strange how they try to pull it back. And that's why they're actually so wrong. And
Right.
that's why I think the other thing is Tesla's going to be a difficult company to look at the forward multiple and say, do I want to pay that for that? Or do
Right.
I want to go off and buy, NVIDIA, for example? Now, if you're doing an NVIDIA and AMD comparison, I think that's a little bit more straightforward to do those two together.
Right.
But when you're doing a Tesla, you can't just look at Tesla PE because the number of revenue lines, the types of revenue lines, the types of earning lines, and the disruption that could be out there. By the way, what's in nobody's spreadsheet is licensing revenue,
Sure.
and the high gross margins from that literally blows up everybody's spreadsheet.
Right. Right. So if Elon is correct, and we had a long conversation, I think it was with Larry on Monday night, talking about no, it wasn't Larry. Anyway, I know it was Brian Wong. We were talking about the fact that Tesla is now able to actually predict how FSD is going to improve.
Yeah.
Seeing what each of the addition of all of this learning does, they are now able, they're saying, okay, it's 1,000 times more this year and then 1,000 times more next year. And so if you break, and I think it was Rains on X, who then did an analysis as well. It comes out June. June when it's 1,000,000 miles between necessary interruptions. So let's just say for fun that sometime in June, Elon makes the announcement, you can sleep in the car. You can, robotaxi is a thing. It's all hit your app and you can send your car out on the road. Is that the ChatGPT moment? Is that when the street will finally go, okay, we get it?
Yeah, this is the thing I struggle even in the conversation with both bulls and bears. If you look at the forward multiple on Tesla, and it's nowhere near its all-time high,
Right.
but it's also not low.
Right.
That would tell you that some of this is being factored in. It's not zero,
Right.
but you just don't hear it verbally a lot on when you hear analysts talking on TV.
Mhm.
When you hear us talking on YouTube and really analyzing the company, it's a much broader discussion. So, yeah, in terms of how or when our analysts are going to factor it in, it's really hard to say because, like in the case of NVIDIA, Jensen Huang was actually pounding the table before ChatGPT actually came out and says, look, like what we're building for AI is going to be massive and here's why. And of course he's a highly credible person, but even back then he wasn't even they weren't listening and the street was just way, way behind. And there's no reason why they wouldn't be way behind here, but there is some credit being given to Tesla just, supporting this high a stock price with where its earnings are. There is some credit, but right now it's actually returning to growth. So, it's and of course, I think analysts are gonna be like, "Well, I want to see that." The proof is in the pudding, kind of thing. But they're returning to growth, so that should provide some more credibility. But yeah, it's hard to say. It really is. You know what? My final answer is they're going to be late, and my other final answer is we are going to get surprised.
I see.
We are
Okay.
going to get surprised with a licensing announcement.
Mhm.
We're going to get we could get surprised by a number of different things. We're going to get surprised.
Well, speaking of surprises, we got the permitting whole dust up the other day. 2.5 million new square feet. Or are they still building it out inside the building down in Austin, or is it all built out already? Anyway, we had all that kerfluffle. I'm not sure we still know exactly, but it sounds as if it was permitting for occupancy, meaning it's either almost done or it's virtually done. But that's 2.5 million. That is a very, very large space. So does
Yeah, I mean, all the data's out there. If you're analyzing the company, you see what the expansion plans in Berlin, you see in Austin, you see what they're building in Nevada. I mean, it's all there. You just have to put the pieces together. Now, does all of it always come to fruition? No. Like we had how many starts and stops with Mexico, but even all that's out there too, with the tariff concerns and the geopolitical concerns,
right.
and quite frankly, the slowdown that occurred over the last 18 months with interest rates and so forth. So it's all kind of out there. You just have to. Tesla is preparing to grow massively
Right.
in everything, in their factory square footprint, in their data center infrastructure. Everything is being built for significant scale.
So what would you think this 2.5 at this time? Because apparently it's not yet in use. And again, people don't, I'm not sure people realize how much space that is. I mean, they were trying to put in a million square foot distribution center over here in the town just next to us. And the entire, it became the issue of that city for 2 years because it was such a massive building. This is 2.5 times the size of that. Is this indicative of any of the things we've been looking at in terms of 2.5, in terms of unboxed, in terms of any of that stuff? Do you think
Yeah,
this is part of that?
yeah, I do. Again, I think Tesla's ready. The next Tesla product is going to be a factor of a summation of all the prior products. So they're going to build, they said, Elon said somewhere between 2 and 4 million is the annual run rate. And that's a wide goalpost at this point, and they'll narrow it down at some point. But that's the 2 million is the summation of the current portfolio right now in one product.
Right.
The other thing with Unbox is you're going to have room for all the modular assembly to occur.
Mhm.
And the lines themselves may be smaller in total surface area in terms of where everything comes together, but you're going to have all those separate areas for production of the modules, the motors, the battery modules, and so forth. And they're going to want to have less. They're going to want to minimize movement as much as possible. So as a motor comes off the line, they're going to want to have it, have a way where it kind of just robotically feeds into the unbox process, into the unbox line. So I can see them. That would be fascinating to sit in and just sit through the
Wouldn't
kind
it?
of the design of what they're what they're thinking. But at the end of the day, everything's about reducing movement and reducing the amount of square footage and actually volume needed to produce the product. So yeah, the factory is a revision of product. So the unboxed factory is like the next revision. The current revision is the Model Y factory, I think, in Shanghai, and probably the Model Y factory in Austin. And that's kind of the current revision of how product is made. Call that version 3 of the factory. Version 4 of the factory is going to be this unboxed thing. Their factories are like a portfolio product.
So rumor has it, I mean, it was more than a rumor, I guess, but I'm not sure it was a fact that the 2.5 vehicle will start being made in Shanghai not until the third quarter, which was a little bit of, I think it might have even hurt the stock the other day. And or what are we going to call it? Whether it's a hatchback or whatever it is, won't come out until the third quarter in Shanghai. Other people then jumped on that and suggested, well, maybe the 2.5 million, well, maybe it's going to come out of Austin first. Maybe the US will get it first. Do you have any color on that? Do you have any theories or thoughts on?
Yeah, I don't know the exact numbers for Tesla's supply chain, but when you're developing a product, you want the fastest development times to to when you come up with a database to get it out to the supplier, get a DFM, to get the prototype parts made and bring it back. Or if you're making the part, same thing yourself. So it's incumbent upon Tesla, since these interim vehicles are kind of on a tighter time schedule, is to develop them in the site that has the lowest literal latency, both not only network latency in terms of the distance and time parts travel, but also the fastest tooling cycle times in terms of, like, I give you a database, I get a part in X number of days or weeks. And we used to, on the mobile phone side, we'd have everything classified, in terms of like uh, metal tools for metals, tools for pure plastics, injection molding, insert molding, and so forth. And we'd had cycle time goals for each one, and we were trying to improve upon them year on year, because that formed the basis of each development cycle and how quickly could the development cycle be executed. So in short, they're going to develop the vehicle. I believe in the site that gives them the fastest development times. I think that's Shanghai, but we'll see. I'd have to think that Tesla in the US, though, they're kind of unique. They have tremendous machine shop, and they have tremendous tooling capability actually in the US, even in Austin.
Uh-huh.
So I'm not sure if it's actually China, or it could be very close. But if you hear, Tesla literally just had an earnings call last week, and they said first half of next year. So I think it would be very specious of them to just like have a call, reiterate first half of next year, and then there be something that has any kind of validity to it that says, no, it's more like Q3.
Wow. Yeah. Yeah.
It
Yeah.
may be Q3 for some region,
Right.
but the first half of production is going to start somewhere in some region, or they'd have to like literally issue new guidance.
Okay, same question on Juniper. We have seen Junipers now a couple of months ago in Pasadena and other places. We've seen Junipers now in Shanghai. It seems to me that it would really be stupid to bring these out region by region, that they should coordinate this and have them all come out at once, but they certainly didn't do that with Model 3. Thoughts?
Yeah, and I was a little critical of Tesla with the Model 3 rollout. And whatever. I mean, every company that makes something runs into challenges, and they certainly did on the US rollout. Um, yeah, the Osborning risk on a Model 3 goes up by a factor of 3 on the Model Y, just given the volume. So you've got to be really careful. I always tell people, like, in any one quarter, just looking at Tesla's, trying to build 500,000 units, they probably have, $15 billion of supplier liability and internal liability any one point in time, just ordering all that material and having it, in flight. And again, what makes Tesla's unit economics and their gross margins so good is they minimize that excess and obsolescence line very well. And one of the big drivers of that excess and obsolescence line is your forecast accuracy. And when you're building so few models, your forecast accuracy can invariably be higher. And when you're in a build to order model, it can be really high because you're building to an order. The more the Tesla probably runs into a little bit more trouble when they start building, units and just putting them into inventory. That can get a little bit more scarier for them. But again, they have 19 days of inventory. They don't have a problem. So for Juniper, yeah, they want to tighten that window. If I'm Tesla, and again, I'm not smarter than Tesla, but to me, like there was a baseline of that product that that Model 3 refresh was available, I think September in China. And it was announced in January in the US, but it really wasn't available in volume, I want to say till April or May.
Right.
So that's kind of your baseline. It's probably nowhere near what they wanted to have that much time between the two. So if I'm them, I wanted to figure out how to get to be around a quarter or less in terms of volume availability globally. And then you reduce that Osborning risk and you're fine. You'll be okay. But yeah, if you do this wrong, the Osborning risk is many factors higher than the Model 3 just given the volume. That's why Elon was actually himself so aggressive on X saying, hey, there is no Model Y refresh this year. And there was actual literature that went out to the sales shops that said, tell people like there is no refresh. There's nothing for you to wait for.
Yeah. So, anything else on Tesla that's on your mind right now that you're passionate about? That's
No, I mean, just some of the analyst takes, uh, they're just not great. Just from being in the inside of a company that makes complex consumer devices and builds and ships them. Like, there's no way. Like, you have this Tony Sacconaghi example of like the day after Tesla earnings or a couple days after, he takes the earnings and then he tries to denigrate the earnings and say, well, the gross margins were made because of some commodity cycle negotiation. That is telling you that he actually doesn't understand the structural advantage Tesla has, which I just spent 10 minutes on your meeting talking about with COGS. Tesla is an event-driven COGS reduction shop. That means they come up with ideas, they change the product, they change the supplier, they change the process at a supplier, they make it cheaper. It's cheaper for them, it's cheaper for Tesla. They share, they bring it in, they turn it really quickly. The other companies aren't structured to do it and do it that rapidly. If they do make those changes, they have so much inventory, they negate sometimes the cost savings by just tossing away old inventory. And so when you don't understand that, you almost make up something like commodity cycles. There's nothing in the earnings that says we had a commodity cycle and we have lower costs. So he literally just made something up and put it out there and just doesn't understand it. And then the second thing was Tesla beat consensus gross margins X deferred revenue. So you take the deferred revenue out, the 328 million. Everybody's trying to dissect which one's for full FSD and which one's for Cybertruck only. If you take that 300 plus million out, they still beat the 14 whatever 9. They still think they had 15.9 or 16 without it.
yeah.
So that was the other fallacy, is that they're beating because of these one-time things, but these one-time things is where the company's actually going, and they're not one time. So yeah, if there's anything that's on my mind, it's really honestly how, and maybe it's the alpha of the retail investor to just understand and understand these things better and then decide to make different decisions. Because you have this analyst community that has the product, has the company in the low hundreds to mid $100 range. And then you have this other bifurcated portion of the community that's 250 to 320. And it's just interesting how far apart. How can you be double, in such a widely covered stock? How can you be that far off? It just tells you that this is a very difficult company for conventional analysts to cover, and you've really got to really dig into the details and understand what they're saying. But again, he kind of gets on there and just like this again. This is like a big shop. This is Bernstein, and like you say that like we just completely made that up.
Yeah, right. Yes. Yeah, but he's been off on Tesla for a very long time. So speaking of
Yeah.
bifurcated things, on this channel we talk a lot. Larry and I in particular have talked a lot about the two economies. And the two economies there's really maybe four economies if you want to look at it another way, but there's the economy where you have the over 100,000 folks that are doing just fine. They're traveling, they're going to restaurants, they make over 100,000 a year, and they're doing just fine. They're not even paying attention to how rough other people might have it. But the under 100,000s, and this is renewed again in the data that came out this week, specifically this morning, stating that the under 100,000s and especially the under 50,000 a years were really struggling, very badly struggling. So we got that difference in terms of the consumers out there. And then we have the entire business community that's can't remember, maybe you do, Jeff. I don't remember another time where you have half or slightly more than half of the economy in terms of the segments doing really well. So government, health services, travel, services in general doing very well, but manufacturing, trucking, housing, and commercial real estate all in the toilet. I mean, literally in recession. I can't remember seeing that big split before, and there's reasons for it. It's partially COVID, and there's other things. But now today, we had the jobs coming in hot. Last month, we had the jobs come in really hot.
ADP,
yeah. And then last month on the government side, they came in at whatever it was, 225 or something. And then ADP today. But they're also showing a 4.5% year over year increase in labor. So that is way over what the Fed wants it to be. And it's gotta pass through into the economy at some time. If your services industries are getting hit with 4.5 increases in labor, they gotta pass that along in terms of price. So we're gonna get the inflation numbers tomorrow. The implied number is 2.1 or 2.2%, which would be great. What's the Fed going to do? What do you think about all of this? How does it impact you and your thinking about the economy and the Fed and everything else?
Well, if inflation is in the low twos, why are interest rates over 5? That's the question that they can't escape that question. Whether we have a jobs print that's double or we have a jobs print that's right on target, they can't escape that. So, and then the other thing, there's these long and variable lags. The other thing is, like, if you look at Canada, you look at Europe, like their inflation has come down as well. So I don't know if there's necessarily a reason. COVID, and then all the money, all the spending just really screwed everything up. So we are having pockets of recessions in various areas. And so the Fed has access to a lot of metrics and a lot of data, and they're not going to just look at one thing to make a decision one way or another. I think the 50 basis point cut was the right thing to do. And I think as long as they're, 300 or so basis points above where inflation is, even if they're 200 basis points up, let's say inflation reignites and it's 2.5, I mean, they're still way, way, way over their skis, and they need to bring that interest rate down. The other thing is we have a lot of I've never seen a year, maybe I'm just studying it more, but where there's just been so many rehashes of the data, whether it's the employment data, it's the JOLTS data, whether it's, you name it, even GDPs are kind of all over the place. But in general, I mean, GDPs are solid. So we have but you have to dissect it too. So I don't know. I mean, in Q3, like, were we bringing a bunch of inventory in for the holiday? I don't know. It's all these things that have to be looked at. But in general, my North Star is I go back to why is the Fed funds rate 300 basis points above inflation?
Yeah, and of course, one of the reasons could be maybe the conversation we'll have in a second, but we've got the government was a big part of why the GDP was at 2.8, which was actually lower than anticipated at 3.1, which might have been partially because of import-export differences. But the government was a big piece of that. It was up 7.9 or something, quarter over quarter. Yeah. Or no, maybe that's year over year. I'm sorry. 7 point, I mean, that's massive. And it turns out, third quarter last year was a big jump in government spending as well. So this was a jump over the big jump from last year. So it was a little shocking. And that, is something I think that's going to have to be looked at. We'll talk about in just a second. But that might be what the Fed is also thinking about, and what the bond, the treasuries are maybe thinking about, because they went back up today. They had come down a little bit. The bonds, we'd had a little rally, and the interest rates had come down a little bit, but now they went back up over 4.25 again.
Yeah,
So
we had the hot data. We had, GDP, and we had the ADP number, and that it took it back in the other direction. So yeah, the bond markets are telling us that, like, the bond markets are saying you shouldn't have done the 50 basis point cuts. Things are too hot.
yeah,
So it'll be interesting to hear what the Fed does next week.
definitely. Well, we have an election. Did you know that?
Yeah.
Are you garbage? Or are you not? Are you anyway? It's
Yeah.
no secret how either of us are rooting.
Yeah.
It's
Yeah.
pretty clear to everybody out there. But if you take off your partisan hat, do you think, first of all, do you think it matters over the next 6 to 9 months? Do you think it matters whether it's Kamala or whether it's Elon? I mean, whether it's Elon, it's pretty funny,
Elon.
or
Yeah,
whether
it
it's
does
Trump.
matter if it's Elon.
Do you think it matters
Uh,
who's in the medium term, the 6 to 9 months?
what matters to markets is mixed government versus all one way or another. Because all Democrat, you start getting into crazy town of, unrealized capital gains,
Right.
more, just unfettered spending, and just, there's real concerns about, destabilizing markets with some of these proposals. And I know she's come off of some of these, but there's some really strange proposals out there that would, you know, and then, on, Trump's side, he's got some, he's known as being favorable to business, favorable to crypto. And I think you are seeing, all these dips being bought in the market. You see crypto now over 70,000, or Bitcoin over 70,000. And I think they're pricing in what they think may happen. It's not clear what's going to happen on that day. I think there could be a lot of movements in either direction. But markets, I tend to like mixed government. But what I like to remind people is there are lots of puts and takes. Like, don't go all one way or another when you see the results of the election, because, like, for example, everybody thinks Trump is going to obliterate the IRA. He can't. It's a law. He can't executive order an IRA. But let's say it is an all Republican, Congress, Senate, and executive branch. They may definitely work on, getting rid of the IRA. But what would they replace it with? Well, if he starts talking about, for example, tax credits for vehicles made in the United States, related, like the interest on loans and so forth, like he talked about at the last rally, well, then all of a sudden you're replacing an IRA credit with that, at least on the purchasing side. The other thing is all these battery factories and a lot of the mineral mining stuff are done in red states. So you're going to have the governors and senators and Congress people from these red states saying, hey, 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 I know we don't like we call it the Green New Scam and so forth, but we just hired like 20,000 people over the last 2 years to mine minerals, do refining, or set up a battery plant like in, Blue Oval, you have Tennessee, Kentucky, you've
Panasonic.
got you have Panasonic in Kansas City, or sorry, in Kansas, and you've got a lot of this stuff in red states. And then you've got EOS, for example, the zinc bromide battery facility that's in Turtle Creek, Pennsylvania. Massive, maybe the top swing state. So you got to be careful. He's got to be careful with what. So I think there's rhetoric to get elected, and then there's what's going to happen when he's governing. And what's going to happen when he's governing is if they're building this stuff in the U.S., even if it's green energy related, I think he's going to be fairly supportive of it, especially if it's batteries and if it's related to creating or storing energy. I think he's going to be more supportive than others think.
Okay. So now I'm going to make you president of the United States. You've got Vivek and Elon, and they're just chomping at the bit. They want to start reducing the size of government, which is the number one way we can get interest rates down. The number one way that if we can get the deficit down, we can get interest rate down. We can get, what do you call it, inflation down. So where would you start? Where would you get? I've played around with a little bit. 2 trillion's a lot. According to Elon, he's got 2 trillion in mind. And I know he didn't just do this. He's done some analysis before he came out with that. But where would you start?
Yeah, he probably has a plan for 3.5 or 4 trillion, and he said two. Um, yeah, I've been, not at this scale, obviously, but in terms of major companies, we've had to do some massive reductions and restructurings. And unfortunately, I've had to participate in that. Um, and what you want to do first is first off, you want to look at, like, should something exist, like, in the first place? Maybe there's an entire department that really is superfluous and it shouldn't be at the federal level. It should be distributed and done by states. And there's actually assets there doing work already. So you're trying to figure out, like, where's the work done and what's truly value added, what's truly meaningful. And do you get rid of something like wholesale? Like, do you need it? Or, like, Department of Education, for example. Then once you step down from the major functional level, I honestly think you have to look at it from a headcount and efficiency perspective. And then you have to look at it from a procurement spend, direct and indirect. Basically, everything that the government buys, what is the ABC should cost accounting of it? There's crazy stories about what the government spends for certain things, and it's very different from the private sector when you have to meet your quarter on quarter financials. And Tesla is notoriously, very scrupulous and very detailed about the cost structure of the products they make. And that's how they win. That's how they win in charging. That's how they have the only profitable EV product line. It's not because they pay whatever they need to pay to get parts in the door. They have a structured approach for how to simplify what they're asking to be made and how to make sure that it's fair for the supplier and it's fair for them. So, in short, I think they're going to look at, should things exist. After they get through that, that's going to cut out a lot of things, I think. And then they're going to look at headcount, and they're going to look at procurement in the form of direct and indirect spend. Direct spend is, think of it as like things that the government buys, like objects that the government buys. Indirect spend are services and things that the government buys, contractors, everything along the sorts. And then finally, they're going to look at regulations and the cost of administering regulations and the cost burden of those regulations, and how have they grown, and just, is there a path to streamline regulations? So I think they're going to look at it in those three or four areas. I'd love to, by the way, I'd love to figure out how to, I mean, it would be amazing, because I think this could have a meaningful impact for generations. And by the way, there's people who are like, oh, like, what's going to happen to poor people in the government? First off, there are victims in this. There's no question about it. Like, these people didn't make the decision that created the department they're in. They're working, and they may be doing a great job at what they're doing. I've heard Elon say, and I've heard others say it too, and they can afford to do this in the government because of, it's more of a, they want to fix the problem for the future. It's not necessarily a 2025, 2026, we're going to go home insolvent.
Right.
It's more of, when I get to 2027 and 2028, I want these things to roll off. So they could be giving people 2-year severances.
Right.
Like, you've got 2 years. I'm making this up, but you've got 100 weeks to figure out how to get a new skill set. But guess what? If you figure it out in the 20th week, you're getting paid for 80 weeks of your, and we're going to still pay you, and you can double dip. And this may be a great thing for a lot of people, because a lot of people can't figure out how to get a new job inside of, 2 years, right?
Yeah, and you've got, you can always go in like corporations do, and you can buy people out early on their retirement, a couple of 3-4 years or whatever, and pay off. So you have a one-time cost, like Tesla just did when they did their big cutback. It's okay. I'd be perfectly fine with those one-time costs in order to get the long-term benefit. All right,
Correct.
I like that. I like a lot of your ideas. I was just, as you were talking, I was thinking about the fact that the two companies I admire the most outside of Tesla for their ability to do this kind of stuff is, of course, Walmart and Costco. And I wonder if they've got any ex-executives at Walmart or Costco they could pull in, because Costco is the best at procurement anywhere and I've been in front of these buyers and I know how they do it. And Walmart is the best at distribution and keeping things rolling. Not to say that what do you call it? Amazon isn't awfully good at that as well, but
There's great people out there. They could form. I've often said this in the past of, where like when inflation was happening, I'm like, where's this task force of supply chain czars to come in and say, all right, I've got shipping costs. Like I'm going to deconstruct this. I'm going to figure out if we're getting gouged. I'm going to figure out what's real, what's not real, when the roll-offs are going to occur, and how we can accelerate that. I've got eggs and bacon and various, I've got dairy products. So I've got this. Like what structurally happened in these supply chains and how can we accelerate resolution? And I think I think they're looking at it. I think they're looking at the highest order bits, like energy, for example. Like, okay, if you make energy really cheap, like quit comparing yourself to, oh, it's cheaper than it was 5 years ago or whatever. We're pumping more energy out. First off, I don't know if we're refining enough. Secondly, that may not be enough for the need, and that's why prices are still where they're at. So, what if we could get, energy prices insanely low? Like, what's that going to do? So, those are the right things I think to look at. But yeah, the government, my guess is over many decades, the amount of regulations and the amount of people to administer those regulations and the amount of departments that have just grown and just never get
Right.
cut.
I've seen it. You've seen it. It happens so fast, and even Elon had it happen in his company to be able to make that size of a cut. They had definitely gotten bloated. Okay, last question for today. Cathie Wood, who I appreciate, listen to her every single month, as you probably know. And Larry and I take a look at what she talks about each month. So I'm a big fan. I own ARK stock, but she keeps doing this thing, and I just thought you'd be the guy to ask. Maybe you'll have some theory as to whether this makes sense to you. Okay, I can understand Tesla for the last 5 years has been kind of up and down, up and down, up and down. So she's gotten to where she's got 12, 13, 14% in any one of those investment portfolios. And so she sells off some to get back down to 10 or 9. I get that. But right now we're on the cusp of what she has famously said is a move to $2,700 a share as a moderate, as the middle. We're on the cusp of that. And yes, she's sitting on 14%, but would you think this would be the exception to the rule? Do you think that it drives me crazy that you're selling out at the point you have so much conviction?
Well, first off, I mean, we should just realize that, no one's infallible or perfect. And I'm sure they're not picking the perfect highs and the perfect lows,
Right.
although their entry points on Tesla have been pretty good.
Yeah.
In terms of like where they revented on some of these broader dips. But I mean, if you look at where they sold out of most of their Nvidia, I mean, it's literally
Yeah.
almost 10 times lower than where it is today. They're not infallible. They don't get everything right, but they do really good research. And what they do is, this is what I think we're trying to do too in some of our communications, Randy, is just try to pull some of these pieces together, but let people make their own decisions as a result.
Right.
So at the same time, I can't claim to understand exactly, what they're trying to do from a risk perspective. I don't know why you'd buy a bunch of Archer Aviation I don't know what's like, why do that? Or like all this, Roku and a lot of different things, but, I'm sure they have a reason but you're back to your question of like, hey, we're on the cusp of this growth. I mean, there's going to be pullbacks along the way. We're not going to go up in a straight line. So when you have a big run up, we had, what did we have? 25% or so of a run up. It's not the end of the world to take some off the top. And guess what? If we get a dip, they'll reinvest it. So I think it's honestly purely it's portfolio management. I do look at the reports and I'm like, why did you buy that? You sold that and you bought that. But I think they're just not connected. And I think they also need to continue to raise cash as well and improve their performance. But yeah, it's
Yeah. So
I do respect their research a lot.
I do too. I felt like I understood the NVIDIA because even as NVIDIA was running up, there was all this chatter among really smart people that I respected about, well, does NVIDIA really have that much runway? I must have asked everybody that I trusted, probably including you, are they really going to be able to continue to have this kind of growth for 4 or 5 years? Is there really that much need for this much compute in the world that they're going to continue to have this runway? And that was the conversation that was out there. So I can understand that their research might have been saying the same, asking that same question. I mean, even the All In podcast guys were pretty much all saying, I don't see that, so I can understand
Well,
that.
none of those guys are from consumer electronics, so not that they're very smart. Just if you would have asked me, I would have told you the answer is yes.
That's the, yes.
And I got asked by a number of analysts along the way, like when China happened, what's going to happen? I'm like, they're gonna have a redesign. They're going to come out with a patch. And guess what? There's more demand in the other regions than they had in China only demand. So like, there's a home for everything that they're making. Don't worry about it. They can continue to grow while they come with a patch. And then I was asked about double ordering I'm like, this is not going to be an issue with this system that they're building. And the reason is the costs are so prohibitive, the pricing so prohibitive, and the supply is so low that NVIDIA has to do non-cancelable
Yeah.
pay, take or pay contracts with these partners. Now they may not do it with everybody, but with most they probably can and should, and they probably did. So when all these analysts got on CNBC and said this is cyclical, there's going to be a big inventory buildup, and there's double ordering. I'm like, there's not double ordering. If you have the kind of cash to double order $40,000 GPUs, I think there's something else going on in your company that you're just not aware of. So there is no double ordering. And by the way, NVIDIA is very sophisticated in their supply demand planning operation. And I'm sure they could figure a lot of that out. So anyway, there's things I think that could have been demystified on the outside. And again, it's not saying there's nothing that's zero risk, but they've got a bit of a runway. The termination of their runway could be somewhat self-inflicted. It's not necessarily going to be so much another competitor on training. It's going to be more of like, where does the compute transition to? Where does the workload? Right now, the workload is on the training side. Think of it like being the compiler to C in different software. Like nobody's buying compiler stocks, but what happens? What stocks are people buying? The applications that are built off of those compilers that are these wonderful social media applications, these wonderful applications on our phones like Uber and so forth. And that's where the workload transitioned to. The workload went to the actual product and inference side, and that could be where what gets them, which is going from training to inference. And guess who makes their own inference?
Right. Yes.
Tesla,
Yes.
Google. So there's that could be the thing that starts to. But they've got a big advantage. And again, they don't just ship hardware, they ship software with
And
CUDA.
I didn't plan to ask you this, but while you're talking, I just couldn't help myself. Brian Wong has a very elaborate spreadsheet where he says that Elon has already won in terms of XAI. But if you add in, of course, Tesla's amazing amount of supercomputer capabilities, he's already won it, and there's nobody can catch him because of the speed with which he is able to deploy them. And so at this point, Grok will eventually be the smartest one out there. Now, there was a lot of clapback today, I guess, from was it from Microsoft, or was I can't OpenAI? Maybe I think it was OpenAI saying, "Oh no, we've got more compute that we haven't told you about," or something of this nature. But what do you think about Brian's analysis? Do you think it's
I
over?
think he's right. No,
So,
no, I think he's right. And again, analysts like in the EV piece of it with gross margins and profitability, they kind of like they're trying to figure it out, and they're like, oh, it's these ZEV credits or it's this or it's that. And they didn't look at the speed of the Tesla supply chain and how that helps them throw off cash and drive COGS lower. I've been explaining this for 2 years. The same thing is happening here on the infrastructure side. It's the speed of bring up from that network of bringing that silicon in and bringing those GPUs in to the time to bring up and bring the data center up live. You're talking in days, where it's others, it's over a year. And that's the time to profitability, the time to break even. He just blows up all of those metrics, and others don't figure that stuff out. They just kind of do what everybody else is doing and thinking they have the better application or the better mousetrap or Copilot's going to be amazing or whatever. And if Copilot isn't amazing, what you would want to do is you'd want to fail quickly and
Yeah.
you'd want to get the data center up quickly. You want to get the users online quickly and you'd want to fail quickly. And you'd want to be able to patch quickly. You want to find defects quickly. And so the speed of the operation is what I think a lot of people miss with Elon Ventures. And I think Brian is correct to call out that, he's kind of at this point of escape velocity and no one's going to be able to catch him for it really for the foreseeable future. The question is then, is there some sort of like fundamental thing they're missing on the logic side or their applications developing with Grok or, you know, that's the thing to think about. But like the EV supply chain and engineering side of it that they've mastered, that he has those same kind of core elements to bring up network infrastructure, and it's helping him in these other ventures.
Okay, well, thank you very much, as always, for coming on and explaining stuff to
Yeah.
me and to everybody out there.
Yeah,
And
good conversation.
we'll cut you loose right now so that I can go into the numbers side of the program.
Yep. Take care, Randy.
Appreciate
Have a good one. Bye for now.
All right, so where are we then? So what a day today. A lot of information, a lot of stuff happening on the markets. Let's start with what happened during the day today. We got the Dow up 91. I'm sorry, down 91. I don't have red-green problems. I really don't. I'm not colorblind. Anyway, down 91 for the Dow, down 104 for the NASDAQ, down 19 for S&P, and Tesla down $2. Let's just check on the after hours for Tesla, down $1.50. All right, and then when it came to the Magnificent Seven, you had Apple down, Google up, etc. Not significant numbers, pretty much along the line. But we had, whoops, I'm so sorry. I was going to talk about the ones that had their earnings. So Meta is down 3% in the after hours. And that was somebody else was today. Who else was today? Google was yesterday. So was it Microsoft? Let's see, Microsoft down 3%, all 3.62% also in the after hours. Okay, let's go ahead and take a look at the bonds, which have just come out. The bonds were, of course, bouncing back up today. And we have got the bonds. Yeah, bouncing back up is right. We are back up to almost 4.3 on the 10-year. This is bad, bad, bad. We do not want to be at 4 point. So we are at 4.292, up 2.8 in the pre-market. We have got the 2-year up 2.4 also at 4.178. We have got the 3-month up 2 and the 2-month up 1.2. So yes, in general, bonds are definitely, the yields are headed higher. Again, this is indicating, and by the way, the betting has now come down a bit. It wasn't about 85% likely that we're going to get a 25 basis point cut. You just heard Jeff say he thinks they should cut anyway. I don't know whether they should or shouldn't, but what I do know is I think the odds are slipping. And we'll probably know a lot more about it tomorrow when the PCE comes out. And then we'll get another big hint on Friday when the jobs numbers comes out. So then let's go ahead to oil. Oil has bounced back up a little bit. We're back to 69 on Texas Intermediate. This is apparently because there was a little bit more drawdown on U.S. stockpiles than expected, as well as I told you this morning that the Saudis and OPEC have said they might not, after all, they may not expand production going into the end of the year. But man, if Trump is elected, you can bet that the United States is going to be expanding production. So that will definitely start seeing oil prices come down. And that might be why they're staying as low as they are right now. Natural gas, I promised you this morning I would look into this. I missed it sometime, I guess, yesterday. Natural gas went through the roof. It was sitting at about $2.28 or 29 cents. And it's now at 2.82. And I don't know when that happened, but I completely missed it. But it was right on the chart. It was like a total vertical. So natural gas, I didn't see any reasons. I didn't see any headlines for that, but maybe a cold snap is on the way. I don't know. All right, we got gold down a little tiny bit. So it did break through 2,800 in today's market. Of course, an all-time high, slightly under that at 27.98 right now. Silver down a little bit, 0.45 at 33.92. It's been hovering around that 34 level now for quite some time, and copper is unchanged in the pre-market at $4.35. The dollar continues to be not much movement here in the pre-market. We're looking, it's been very, very strong, especially when you consider how strong gold is, how strong Bitcoin has been. Everything else is, all these things are strong, and yet the dollar continues to be strong. So speaking of Bitcoin, it's at 72,490. It did come down. It was looking like it might hit all-time highs, but now we are off of those at 72,487. And now we got the equities tomorrow, or what we're looking at in the pre-market. The Dow down 27 or 0.06%. The S&P down 1725 or 0.29%. S&P down quite a bit, but the NASDAQ even more. That's probably indicative or influenced by the fact the earnings reports that came out of the Magnificent Two today were not bad, but some of the guidance was not what was hoped for. And we had a couple of non-Mag 7 tech companies that had really bad results today. So all of that, and kind of a general beginning to have a feeling overall that maybe the earnings numbers won't be up as much as was expected overall the entire earnings season. So anyway, we're looking at NASDAQ down 93 or down 0.46 in the pre-market. All right, well, that's where things sit right now. We'll see you in the morning. We've got a video I did earlier today about Optimus. I think it would be well worth your going back and checking it out. So I'll put the card right here. And we also talked a lot about the moats around Optimus, the reasons why, even though competition won't matter, competition won't have a chance, kind of like everything else pretty much that Elon does. All right, that's all I got for you right now. As always, it has been great talking to you.